The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Maybe I'm live. A few technical difficulties this morning happening as we come on the air, but nonetheless, maybe you can hear me. Let me know if you can out there. Right now, we got the S&Ps positive by 52 points, trading at 3,051. The NASDAQ positive by 125, trading at 97.28. All good. Okay, perfect. You can hear me. I like it. Quite a market, quite a reverse turnaround. As we come in, I'm just jumping around to a couple things. My computer not quite keeping up with everything I had going on this morning. And there we go. All right, we're good. Why not? So we'll jump right into one of the stocks on my radar. We were talking about it in the den already. We get the markets up almost 2% this morning. You have oil up 27 cents. Gold contract catching a bit as well, up $8. How about you? So you have Party City. I was looking at this morning, getting ready, accelerating on their numbers. They are also now tough numbers for Party City, but jumping over to the number that they had. Talking about Party City, down at the bottom, the last one, that what they like is the stock's getting a boost after the company announced a $100 million bond deal that could cut its debt by 25%. So there's Party City, closed at 142, we're as high as 190, but they missed in terms of quarterly loss of 28 cents a share, greater than expected 17.1% decline in same-store sales, but Party trading higher. And the other one, how about it? We'll kick it off. How about Hertz? You want to talk about some volatility, up to almost $7, back down to below 2 at one point yesterday. Today, we're back up to 3. The headlines about Hertz: when you tell the world you're going to go bankrupt and your stock goes from 50 cents to $5, you might just say, hey, instead of getting all this debt financing for our bankrupt company, why don't we sell shares to people that if they want to buy our bankrupt company? Proposed a $1 billion stock sale to capitalize on the quote-unquote, as Bloomberg calls it, odd rally. Stocks of bankrupt companies typically get wiped out, but after an enormous 2-week rally, the car rental giant envisions offering as many as almost 250 million common shares and set a hearing for Friday to consider the idea. Now, they wanted it as quick as possible because of the volatility they're facing. You see where this is going from Monday, actually eclipsing almost $7, back down to below $2, a low of 160 yesterday. You're back almost double that price to 320 today. The best part about this, if you want to buy shares from this company, you're going to do it. Where's the disclaimer at the end? Hertz said it would warn any potential buyers the common stock could ultimately be worthless. There you go, folks. All right, jumping around to the markets as we kick things off. A little bit of a rough start with some technology, but let's check out. This is an hourly chart I got. I'm going to put it on a 15-minute to go back for 5 days. Quite a 5 days we've had. As you can see, my computer lagging a little bit still. So we had the highs of 32.31 on Monday. S&P basically positive for the calendar year 2020 coming in. 3,200 is basically where we're trading at on Wednesday. The slide begins at 2:30 on Fed Day. Chairman Powell comes out. He says that 6.5% decline in GDP this year, only a rise of 5% next year. You see the S&Ps trade from above 3,200 to below 3,000 right at 6 p.m. last night on the open. But check that out. We're up almost 60 S&P points from that price level, 3,051. Quite a decline, though, we have to make up for over about the last 36 hours. Jumping over to the Dow up 490 points, actually made it below 25,000. Pretty remarkable action when you consider it. If you go back to Wednesday afternoon, there's your Fed volatility spike. We were above 27,200, and remarkable, you say goodbye to 27,000, you say goodbye to 26,000, and you say goodbye to 25,000, all in the span of just over 24 hours. 27,000, bye-bye. 26, bye-bye. 25, bye-bye. How about a 24,000 handle? All in the span of about 27 hours to be exact. We're getting a little bit of a pop, though. The Dow, 25,521. NASDAQ, we're pretty far off those 10,000 highs. 10,155 was the high. You see the slide all the way down to 95.84. So you're talking about almost 600 points. Yes, 600 points or so. Now we're up to 97.24. 10,000 up at this level right here for the NASDAQ. Jumping around to commodities, crude oil, quite a slide yesterday. The markets reaching $34.48 not long ago. This week, Sunday night, we were at $40.44. Crude, get a little bit of a pop starting at about 4 in the morning. Check out that pop from 35.70. We're now trading at about 36.57 in crude. Gold continuing the climb it's had this week. Check out that from last Friday's low of 16.71. Basically a one-way move. Got up to 17.54 yesterday. Overnight down to 17.30, but gold climbing yet again today. And notes and bonds, we're getting a little bit of lower price and higher yield. They got the 10-year yield back at about 0.7%, up about 3 basis points. The 10-year trading down about 8 ticks at 138.25. The 30-year down a full point and 2 ticks at 177.09. In terms of the run we've had, though, just a slight reprieve. You back things up. I mean, the 10-year. We were approaching 1% last week for a yield on the 10-year before this reversal, and you traded from 136.22 to 139.03. That's where you saw yields go from about 0.9% to under 0.7%. So a slight pullback, but really nonetheless quite a move in those bond markets. Jumping around to some of the other stocks with action, Tesla yesterday holding up pretty well. You see Tesla shares at about 9.76. Some of the tech stocks hit pretty hard yesterday. Come on, cooperate. So Microsoft, you go from 198 at the end of Wednesday to 186 at the end of Thursday. We're going to be up a bit, but check out even Microsoft from 191. We're currently at about 188. So you've lost $3 from the high we had pre-market. Some of the airline stocks as well. Boeing, so Boeing, really talk about some volatility, right? We were just at 240. We went to 166 yesterday. That, of course, putting a hurting on the Dow. One of the big reasons you went from 27 to 26 to 25,000. The airline stocks, now Southwest got an upgrade today, so they're getting a pop from 33 to 35. They got hit pretty hard, though, in terms of pulling back. But you look at some of the other airlines. United from 50 to 32, back to 37. American Airlines was down at 14. We're going to open about $2 higher to 16, but we were just trading at 23 last week, and we'll finish it up with Delta. Delta at about 30. Other stocks with action, we'll get into it after the break. Lululemon out with their numbers. There's some volatility for you. Last night, we traded from 310 down to 282. Lulu back at 297 right now. We'll get into their numbers when we come back from the break. Stay tuned, folks. S&P is positive by 55. We get the NASDAQ positive by 130. Dow positive by 532. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the S&Ps popping a bit higher, now up 62 points. Zooming in on the action overnight, we hit 29.92 at about 6 p.m. on the futures. Check out that acceleration, 15-minute bar. Since I came on the air at 8:30, this bar, we opened that bar at 3,049, and we're currently trading at 3,060. The highs we had about 6 a.m., 3,063, so right up at that level. Jumping around to some of the news stories that I'm finding interesting this morning. What are we starting off with? So interesting here, just talking about how everything gets hit. The numbers in here are pretty staggering. Chargebacks have climbed by 25% in terms of charging back a charge for your credit card. Smaller retailers being hit especially hard, something they're usually not dealing with. And they talk about whether it's using Square, and then you have processors holding more reserves with the anticipation. So the way it works is you process a sale. You're usually provided that money minus maybe some fees at some point. Maybe there's a reserve held, but they're talking about 20% of the payments the marketing group received through Square will be held as reserve, because that's the type of numbers they're thinking that are coming for different chargebacks for a variety of reasons and everything that comes with it. Education, leisure, internet, hotels, airline, cruises, of course, and all those numbers. Some stark numbers in terms of the global economy to suffer significant scarring, the IMF says. The IMF set to release an economic growth projections June 24th, so 12 days from today, will be very likely worse than what we had just in April, even as there remains profound uncertainty. So they're going to estimate worse. And where we had jumping around, come on. That's right, Lulu. So we came into the break talking about Lulu numbers. We saw the fall off they had. Sales fall 17% as the retailer takes a hit from stores being closed. Shares drop. Lulu reported first quarter earnings per share of 22 cents on revenue of $651 million. Sales were down 17% despite its online business being strong. They took a hit, of course, with stores being temporarily shut for COVID-19. As of June 10th, it said 295 of its 489 stores globally have reopened for business, and about 50% of stores in North America. It expects almost 100% of stores to be open again by the end of this month. That's pretty encouraging. But, missing everywhere, as we talked about, Lulu shares down a bit on those numbers. I mean, if every Lululemon store is back open by the end of this month in 18 days from right now, pretty encouraging. Lulu popping a bit from last night, 282 to about 300, down from 310 yesterday. Interesting here. How about insurance, right? Talking about being out of business, U.S. insurers. We talked about this in our program yesterday, talking about different insurance numbers. Now, we talk about the riots. It seems to be the consensus. If there's damage, physical damage to some of these storefronts, that's covered by property damage in most cases. But when you start to talk about loss of business, property and casualty insurers have cast the coronavirus pandemic as an unprecedented event whose massive cost to small businesses they're neither able nor required to cover. The industry warned it could cost them $255 billion to $431 billion a month if they're required to compensate firms for income lost and expenses owed due to being shut down. So usually this is talking about, if you have damage and your business is shut down because you have damage, maybe. Business interruption policies, that's the term I was looking for, only apply, and this is what insurers say, when actual physical property damage prevents a business from operating, and any attempt to apply cover beyond that for a pandemic are unconstitutional. That's their statement. Where they fall, where the truth lies, probably somewhere in between, as is usually the case. But you're going to see that one play out. So we talk about the economy, we talk about the numbers. Some spikes going around the country, and one of them, of course, Florida we'll get into. But Houston, you had headlines last night, quote, on the precipice of disaster with virus cases spreading. Texas, one of the first cases to states to reopen. You're seeing a big spike there. Arizona, coronavirus cases nearly double since Memorial Day. State nears hospital capacity. Florida, so here's a couple charts, 4 of them to be exact, talking about Florida, daily new cases and trailing 7-day. You see the spike even in June. Now you talk about testing, which is important, but when you have the positivity rate, okay, that's just how many out of 100 are testing positive. And we're at about 5.6 today. The 7-day average is in blue at 3.9, but you see where we've climbed. We were at 2.5 and 2.3 for the numbers and for the 7-day average. Even the 7-day average was 2.3 people testing positive, and we're now almost double that at 3.9. Hospitalizations going up as well. And before I came on for this segment, I just went to the New York Times, which I love their information in terms of every state, new cases. And that was the number, unfortunately, the biggest spike that we've had on record, 1,698 cases, and that is the yesterday data. So you see the spike, just something to be aware of. As this, you saw the sell-off yesterday. It kind of came out of nowhere. You did have Fed Chairman Powell speaking, of course, Wednesday, which is probably the reason that accelerated things from the highs we've had since May 14th. The market's basically been in a one-way direction up. The Dow traded from 22,700 to 27,600, about almost 5,000 points. So of course you're going to get some pullbacks, but as we see these numbers, accelerate, there's no pausing anything here. As we get through the summer, what's going to happen when schools open back up? Even if businesses are open, the point being, if you're seeing numbers spiking, I'm seeing friends in the New York area, for instance, and everything, and they're seeing this. There's some of the hardest hit areas where they really, it was more fearful when you saw the lines in New York. I have friends in Brooklyn, Manhattan, and I said, you know what, I'm going to stay in for a couple more weeks. Things are going to be open, but are you going to be back on a plane? Are you going to be back traveling? Yes, a lot of people are, and that's okay. But the use of masks keeps showing that it can really stop the spread. So I know in Massachusetts it's a big deal because they were hit so hard, wearing masks everywhere. California, some areas they're required. That's causing some problems. Whether they should be required or not, that's a debate. But I wear a mask to respect other people. That way it just stops the spread, because this is happening, folks. Florida, 1,700 new cases yesterday, And unfortunately, that line is not something that usually is going to reverse overnight. So just be aware of that. You got Arizona, Houston, Florida, some other hotbeds as well. Hopefully we stay safe over the summer, and hopefully we get treatment or a vaccine or something. Okay, Quicken Loans, how about it? Talk about an IPO. The mortgage industry just been flying off. Now this one gives me pause because, if business is going to keep going up, you're not going to sell off your company, right? this might be the peak. This might be the lows of interest rates, folks. Quicken Loans, they're going to go IPO. It's just like when Aramco, right? It should have been known. Aramco goes IPO, and then you have the price of oil literally go from $60 to negative, okay? Quicken Loans, they're going to do $70+ billion in mortgages this quarter, up from 53 the prior quarter. Let's get into the numbers because they're staggering. So you have Dan Gilbert. They're going to do an IPO. It's going to value Quicken at tens of billions of dollars. And here we go. Mortgage rates set a new record low yesterday. Okay, yesterday they set a new record low, and today Quicken Loans is selling off. 2.9% was the record low. March was the biggest closing month with $21 billion. They're going to do $75 billion this quarter, up from 53 last quarter. What are the odds that they're not going to hit that number, $75 billion, again in a long time? And that could mean maybe interest rates are rising because no one's going to refinance. Stay tuned, folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the S&Ps up an even 60 points. The Dow up 562, clawing back some of yesterday's losses. Jumping over to Tesla. Tesla getting a downgrade from Morgan Stanley today. How dare they at Morgan Stanley? No. Tesla had reached 1032, remarkable. Yesterday closed at 972. We're actually positive by $5 today. not too much volatility compared with the market, right? No real pullback too much as the market was cascading 5 to 7% yesterday. Nonetheless, some of the other stories I want to go over. So the UK economy contracted by 20.4% in April, the largest monthly fall on record. Quite a number there. It represented a 24% decline from April of 2019. And mortgage bailout shrinks for the second straight week. So there are 4.66 million borrowers right now in government or private sector forbearance programs, representing almost 9% of all active mortgages. So almost 1 out of 10, could call it 1 out of 11 mortgages right now, is sitting in a government or private sector forbearance. They're down 77,000 from last week and 112,000 since the peak. But you're talking about 4.6 million people. So loans backed by Fannie Mae and Freddie Mac saw the greatest decline in volume forbearance, with forbearance down by 47,000. But here's the kicker, right? So now they're decreasing, okay, after watching forbearance rates rise week after week since late March. It's undoubtedly encouraging to see a number of homeowners in such plans decline. But guess what? Now is the time, while borrowers can delay their payments, mortgage servicers still must advance those payments to bondholders for a maximum of 4 months. At today's levels, servicers of Fannie and Freddie loans will need to remit up to $8.8 billion in advances over that 4-month period. This is all going to come to roost at some point. You have a year basically to defer payments. Time is going to fly, and hopefully the people that are in tough spots right now are able to weather that. But this could be some of the stuff when numbers start to come out, and if there's defaults, because you can't go on forever not paying those mortgages. You can't, because the banks can't go on forever not receiving money to pay the debt that they have, etc. Nonetheless, remarkable action. Stay tuned, folks. Should be a great day in the market. Exciting open when you got the S&Ps near almost 2% in the positive after collapsing yesterday. Stay tuned. We got our man Larry Pesavento coming up live with Trade What You See. Coming up next.